Although the loss of livestock due to disease doesn't occur that frequently, when it does, the loss can certainly be significant. Fortunately, the tax code provides a special rule for handling of loss due to disease. Joining us now is Professor of Ag Law and Taxation at the Washburn University School of Law, Roger McEowen. Roger, thank you for joining us today. We certainly appreciate your time. So what are the requirements for livestock that are sold or exchanged because of disease leading to taxable gain?
Well, good morning, Janet. And unfortunately, this is one of those issues that does occur occasionally. I guess the good thing is it doesn't occur that often, but when it does, it's a problem. But most farmers are familiar with the so-called drought sale rules, and the diseased livestock rules are similar to those from a tax standpoint. Livestock that are sold or exchanged because of disease, or they're destroyed because of disease, may not actually lead to taxable gain if the proceeds of the transaction are reinvested in replacement animals that are similar or related in service or use. So if a farmer loses dairy cows, for example, because of disease, if they're replaced with dairy cows within 2 years, then there is no gain on that transaction. It's deferred until the replacement animals are disposed of.
And when is the gain actually recognized?
Well, there will be gain in the transaction to the extent money or dissimilar property. In other words, you have diseased dairy cows and you replace them with something other than dairy cows. So if you have money or dissimilar property received that exceeds the tax basis of the livestock, then that's taxable gain. So a farmer that's on the cash method of accounting, their raised livestock doesn't have any tax basis. So gain is realized upon receipt of any compensation for the animal. So they need to be sure that they're replacing the diseased livestock that they're disposing of with the exact same type of livestock.
Roger, would livestock losses because of disease be eligible for casualty loss treatment?
Well, the answer is no on that one. Livestock losses because of disease generally are not eligible for casualty loss treatment because the loss is progressive rather than sudden. To be a casualty loss, it has to be sudden in nature. So that suddenness test does not apply with respect to diseased livestock, but they will not qualify under the casualty loss rules.
So what is actually qualified as a disease?
Well, for example, livestock that consume contaminated feed and are lost as a result of that can be treated under the diseased livestock rules, the involuntary conversion rules, but it doesn't have to be a disease of epidemic proportion. It can be a disease that just knocks out a few of the livestock.
All right. Well, Roger, thank you very much for your insight again today. We appreciate it. Roger McEowen, he is with the Washburn University School of Law, joining us on the phone from Topeka, Kansas.